Hello, everyone, and welcome to another edition of iGaming Next Weekly News Live. I'm absolutely thrilled today to be joined by Conor, but also making his first appearance of 2023, Mr. Pierre Lindh. How are you doing?
It's good to be back, Jake. It's good to be back. A few more gray hairs, but other than that, everything is good.
Great. And you, Conor, you okay?
Yes, very well, thank you. We've had a fun week, all recovering from Ice London, of course. Back to the grind now, back to the daily reality after that exciting time we all had last week. But yeah, doing well, mate. How are you?
Yeah, I'm not too bad. Thank you very much. We'll talk a little bit more about ice in a second, but before we do, I just want to say thank you to our awesome sponsors, Playson, for making this possible, and also to everybody watching along with us today. Please get your comments in. Good to see Bogdan here as often as usual. He said, have we managed to have a bit of a rest after ice? What's the answer to that? Probably not.
Well, we had a week.
Actually, I had a great rest because I went to the airport on Sunday to fly back to Malta, only to be met by some snarky person at the check-in desk who's like, can you show your boarding pass? Like, can you show your booking? And I'm like, yes, here it is, And they're like, you're flying tomorrow, not today. So I got denied access to the airplane. So I took a nice day at the airport at Stansted and checked out, not Stansted, at Gatwick, and checked out everything Gatwick has to offer. Actually, it was very quiet, let's say, but exactly what I needed. So yeah, I managed to get some rest.
Plenty of juice.
That's good to know. People be shocked to learn that you've been sorting out your own travel. I'm sure that's where you're going wrong. But I saw your roundup of the ice stands, Pierre, on LinkedIn. That was really good.
Right.
There's a power 50 and a hot 100, etc. Maybe you should do a version for the different stands at ice. I'm not sure how that would go down with Clarion, but I'd read
it.
Exactly.
Yes, I'll do it. I consider doing it. And I can see Phil is commenting in the background here. And, if there ever was an award for the most sarcastic stand, then definitely Phil Pearson would win that with his white label casino brand, the most boring company name in the entire iGaming industry. So congratulations to that.
Yeah, hi Phil, thanks for joining us. He said, I got sick from all the diseased people at ICE. As always, I can sympathise with that. I too was ill. I think loads of people end up with flu and all sorts of various bits and pieces. But yeah, unsubstantiated still are the rumours that COVID actually came from an Ice London show initially in 2019. But anyway, that's enough said on that. Moving on, we've got a bumper show for you today. Now, you might have noticed in the header, it said we'd have our live reaction to DraftKings Q4 results. But for anybody that's tuned in for that, we've got an apology to make because they actually only come out after the market closes today, which will be long after we've logged off. So I'll take full responsibility for that miscommunication. But we do have a way to make it up to you, and that's to look into DraftKings' position in the US market to begin with, fellas. And there's only one place to start, and that's with the latest data from our good friends at Eilers and Krychek. So, Connor, I know you wrote this story, and Pierre, you were pretty shocked by some of the findings in it. So who wants to go first?
I'll start as if you like. I'll give you a bit of an overview. It's always a gift for a journalist to get this kind of data in from our friends at EKG because, as you say, they're always right on the money. They're very, very thorough. These reports are really, really valuable. So we saw that DraftKings and FanDuel in particular have continued to strengthen their grip on the US market. FanDuel's market share over, now, pardon me that I'm not sure whether this was for December or for the whole of Q4. I think for the whole of Q4 22, FanDuel's market share reached 47%. So rapidly approaching the cornering a whole half of the market. DraftKings had a market share of 27% during that time. So between them, we're looking at something like 3/4 of the US online sports betting market, which is just incredible scenes, really. You know, we're kind of moving towards what's starting to look like a duopoly in the US, and they've got so much dominance between them that it's just making it a real challenge for anybody else in the market. So we've got an image on screen now looking at BetMGM and Caesars and how they shape up, and you can see their market share kind of steadily decreasing as FanDuel and DraftKings carry on growing. We've got another graphic though. I wonder if we can get that up on the screen. We have a pie chart which shows us what the rest of the market looks like, and it makes for pretty stark viewing for any other operators who are in the market. There it is. So you've got FanDuel and DraftKings there taking up something like 3/4 of the market. BetMGM about 12%. William Hill's on about 6%. If you will indulge me for a moment while we dive into these numbers, you've got BetRivers, Barstool, and PointsBet somewhere around 2% each. So there's only actually 7 operators in the market who have more than 1% market share. And that's out of 59 operational online sports betting brands that are currently operating in the US. So after those 7, the next 5 brands by size combined have about 1.6% between them. And then if you see right at the top of that chart, there's a tiny little sliver, which is others. And the other operators in the market have something like 0.8% of the market share between them. So I did a bit of maths on this. And that means there are 47 operators currently competing for 0.8% of the market, which, based on the figures from the report, means that they're competing for about $60 million in annual GGR. That's between 47 brands. So it looks like not many of those.
Think what they spent as well.
Not many of those brands are very likely to survive, in my view. I mean, how long can you cling on for when you're probably only battling for not much more than $1 million in GGR each? How can that's annual GGR as well? So how can the marketing costs and the licensing costs and the tax rates justify that kind of thing? How much longer are we going to see 59 brands operating in this market? Not much longer, in my view. What do you think?
Yeah. What were your thoughts, Pierre? I saw you sharing this on socials.
Yeah, can we bring the pie chart up again? Because I have a bit of an insight here actually. Because this is the estimated trailing 3 months GGR exactly. So actually, Kindred should be on this top 10 list actually with about 0.4% of estimated GGR share. And does anyone want to guess why they are not on the chart here. You can remove the chart as well.
Jake, any ideas?
You want to guess?
I
No,
know where
something
this
happened.
is going.
Something
I don't want to
happened.
spoil the surprise.
Yes. Okay. You know where it goes. Okay. It's all thanks to Mattress Mike, the nemesis of the online sports betting industry. Okay.
It's called Mac, but yeah.
The only okay, Mattress Mac. Okay, it is all because of Mattress Mac. This one person who placed a $1 million bet with Kindred in the in Q4 for the Astros to win the World Series, and he ended up winning, leaving Kindred having to pay out the biggest payout in the history of Kindred by $6.1 million, which basically wiped out half of the GGR in North American market in Q4. That basically, otherwise they would have been at 8.8 million in GGR. That would have placed them at place number 9. Okay, so they were removed from that list based on the nemesis that is Mattress Mac, unfortunately. So yeah, he comes and haunts the industry from time to time. You never know when he's gonna strike next.
Yeah, exactly. This is a story from November, I remember, where he basically bet millions of pounds of 6 different sports books, and Kindred was unfortunately one of them. And yeah, I'm not sure they should have taken on that liability looking at those results. I think his biggest bet was with Caesars. So he put on 3 million at odds of 10-1, and Caesars had to pay out 30 million. So their balance sheet would definitely have been impacted as well. He's cleaned up. He sold a hell of a lot of mattresses. But we've got Nico in the comments accusing us of fake news, and we've got Tariq accusing us of using clickbait titles. So our reputation is in tatters, I'm afraid, because we lied about the DraftKings results. We've got work to do.
We do anything for a couple of clicks at the end of the day.
Exactly. Yes. So, is there anything more to say on DraftKings and FanDuel, or should we move on to some European operators today?
Yeah. Well, there's another point. Yeah, go ahead. Go ahead, Conor. Go ahead.
No, I was just going to say that there's lots more in the report itself and in our article based on the report. There's loads of information about promotional spend, some bits about the Super Bowl, bit of commentary on that. So there's lots more to explore. But Pierre, please go ahead.
Yeah, another point here as well. I mean, considering the news of Ballybet the other day as well, which published some like horrendous losses, right? And the CEO had to leave the position. They are not on the list there either amongst the top 10 brands, which means that Ballybet, which with like pretty hefty investment behind them, is part of this pool that is sharing to 0.8% of the entire US market. I'm sure there are other brands, if we can to think of here as well, that is not published in the top 10 that is kind of sharing this like minuscule market cap. But that was just a note from my end as well.
Yeah, and Eilers have done more amazing work with their EKG newsletter that just came out before we came on air, where they've got a bit of a scoop on Bally's actually, and that they're basically binning off their in-house sportsbook strategy to try and find a third-party provider because they think they can cut costs that way, which is interesting. Good news, obviously, for the likes of Kambi and OpenBet and any other potential suitors. But just to try and bring back some integrity, let's look at what we might be able to expect from DraftKings later on. By the way, Ryan will be covering the results as they happen, so do keep an eye on the website for the coverage. But so far, DraftKings has reported $264 million in adjusted EBITDA losses, and that was just for Q3. So year to date, the first 9 months of 2022, those losses are $672 million, and are obviously likely to worsen in Q4 as well. It's expecting to lose as much as $575 million this year as well. So it doesn't look like there's any turning point in 2023 for DraftKings. It's a lot more likely to be 2024. And looking back at some of the Q3 commentary, Regulus Partners, one of the analyst firms we often quote, said profitability in Q4 2023 is more than just guidance. It is a strategic imperative in our view. So that's kind of when time runs out in the eyes of investors, I think, for DraftKings.
Yeah. I'm looking at like the estimates now for the report. So in Q3, they lost $264 million EBITDA, and in Q4 they are expected to lose $113 million. So it's a quite significantly lower EBITDA losses that we're seeing already
Definitely,
now.
yeah.
The estimates are actually pretty spectacularly high. They are expected to publish almost 50% higher revenues than in Q3. Obviously, it's a heavy quarter now for all the American sports at the same time. I think something in the US that is a bit underestimated is the effects on the World Cup. I would be very curious to see in the report if the World Cup is mentioned from DraftKings' point of view, if that is something the Americans are actually betting on, for example. But yeah, revenues expected to be up 70%. EBITDA losses expected to be quite significantly down. So they have a lot of pressure on them now to live up to DraftKings, of course, and the stock markets, DraftKings is up like 60% in the last couple of months. So investors are definitely expecting them to do well. I suppose. I mean, you guys know more than me about this, but other online sports betting brands and online gambling brands in the US have been actually publishing quite good results, right? Even on the line of being profitable to some extent. So I
Yeah.
guess investors are now
Yeah.
looking positively.
Yeah, they're getting there slowly. I mean, FanDuel, obviously, who has by far and away the biggest market share, is likely to be the first to full year profitability. And I think Caesars has reported one profitable month and is on its way to reporting a profitable quarter. But yeah, certainly no company is fully profitable at present. Yeah, I'm not sure on the World Cup impact either. That would be interesting to see. Obviously, the Super Bowl was a more recent event, but I'm not sure that will be included in time for Q4. It's worth pointing out that the DraftKings numbers come out today, by the way, but the webcast and earnings call with Jason Robbins is tomorrow. So again, we'll bring you kind of live coverage of that as it happens over on the news portal.
Another short insight as well is that both Betsson and Kindred talked about how the sports betting margin was significantly lower in Q4 than the normal quarter. However, that will obviously be from the European-based sports to a large extent.
Yeah, exactly. Mostly soccer and the World Cup and things like that.
So it'd be interesting still to see if DraftKings margins are affected by just the general global sports calendar as well, or how it's looking on that front.
Yeah, for sure. So let's move on to Betsson then, as they've actually published results that we can discuss. So Betsson was interesting. Talking about the World Cup, they increased their marketing spend quite significantly, both before and during the tournament. And that seems to have paid off really handsomely for them, actually. So it was another record quarter for Betsson in Q4. Revenue increased by 40% to 220.6 million. And that capped off a record year, actually. So in 2022, group revenue reached 777 million. That's another record and an annual rise of 18%. So Betsson heading in the right direction, and a lot of it is being driven by growth in the sports book, where revenue rose 46% to 240 million, which again puts them in a perfect position when a tournament like the World Cup does come along. Any thoughts on this report, Pierre? Have you had time to check it out?
Yeah. I mean, the biggest news for Betsson is that they are just absolutely kids in Latin America. Right, or at least if you read the report, that is what they want you to look at. Let's say, Latin America is a huge growth driver, and I heard as well from someone inside Betsson that even in Q1, especially Argentina is apparently doing extremely well for Betsson at the moment, with an enormous influx of new players from the World Cup, especially. So the World Cup was a massive growth driver for Betsson, and then the players stayed after that as well, so continue to play. And apparently Argentina is one of those markets that have exploded a bit for Betsson in recent months. So The interesting thing with Betsson is now Latin America, in terms of revenue, is as big as the Nordics. So 24% of revenues is derived from Nordics and 24% from Latin America. That is an absolutely incredible feat, considering that Betsson traditionally have been very like Nordic top heavy. But it's actually not the biggest market, okay? And this is what I mean by, you know, they are not perhaps not talking that much about where the growth is actually coming from to an even larger extent, which is Central Europe and Central Asia, right? And if you look through the report, and if you just do a quick Control F and you put Asia in there, you won't really get that many results, right? But that consolidated market is by far the biggest market they publish revenues in, with 38% of group revenues is now Central Europe, Central Asia, and yeah, Betsson has a legacy in Turkey, and those markets seems to be doing quite well, but it's not necessarily something that Betsson is talking about to a large extent. So I'm seeing here, like if you put Asia in there, you get like a couple of results. If you put LATAM, let's see, then you get a lot more. Yeah, America. Yeah. Then you get a lot more results in the report, and that just goes to show, you know, that is officially the biggest growth market that they are investing in, so to say. But yeah, so those are a couple of just points that I took in general. They are machine bets, and they are doing super well, good geographical split, and they have the future ahead of them.
Yeah, and I think exactly what you were just discussing, Pierre, sort of reflects what a lot of people have been saying in the market about mature European markets and heavy-handed regulation, and how challenging that makes those as an operating environment, and how small the growth opportunities are becoming there now. So LATAM is something like upwards of 60% of revenue is coming out of LATAM and Central and Eastern Europe and Central Asia. So it sort of makes it concrete, you know, and goes to show that that's where the real opportunities are at the moment. So it's a nice illustration of that, I think. But yeah, there's not much more to say about it. It's a brilliant quarter for them.
Yeah, I think, I mean, in general, walking around the show floor of ICE, that was just the general talk of the town. It's just Latin America, like that's the growth market currently, for sure. And Betsson has been there for a while now, right? So they have already established dominance over there, so to say.
That's it. Yeah, the spoils will be going to those companies who started that process 5-10 years ago, probably, and now they're reaping the rewards.
Right, exactly. And you can see the difference. But sorry, Jake, go
ahead. No, I was just going to say, so in Q3, LATAM was 19% of revenue. So you can see that's ticking up quite nicely. Yeah, and on Argentina, obviously, it's no surprise they did really well in that market, with Argentina getting to the final and winning the competition. But after the reporting period at the beginning of February, they actually received an online gaming license in Cordoba, which is their third license in Argentina. So, yeah, they're putting a lot of eggs in that basket. Whether it's quite the growth driver they're making it out to be publicly, you're right to probably cast a little bit of doubt on that, Pierre. But yeah, a massive growth territory nonetheless for not only Betsson but all online gambling operators that are active down
there. Absolutely. And it just goes to show as well, like the difference in strategy that was set out between Betsson and Kindred a couple of years ago, where Kindred decided that their most exciting new market was going to be North America. That's where all the investment was going to go to, whereas Betsson took a different route, and they set their sight on Africa and Latin America. And it turned out the bet on Latin America was just spot on, whereas Kindred is now suffering, particularly here because of Mattress Mac, obviously regretting their decision here.
Yeah, who would have thought the strategy would be brought down by a furniture salesman?
Yeah, it was funny. I obviously tune into the kind of earnings calls for these companies, and I always do it with Betsson. And usually there's sort of 15, 16 questions from analysts, but there was about 2 on the webcast this time round. Everyone was kind of looking at each other, didn't know what to say. And I spoke to Pontus about this, and he was laughing, and he was just saying there's not really anything on the balance sheet that you can question. So he was pretty triumphant about that, I think, feeling smug after their results call. But the line of questioning was a lot harder for Kindred, it should be said, who have had a pretty contrasting year to Betsson, all things told. So if we just look a little bit at their Q4 performance, they reported a 25% rise in Q4 revenue to 305 million. A lot of that came from the business returning to the Netherlands. But if we look at the full year, total revenue declined by 15%, which is where the major difference is, to just over 1 billion, and underlying EBITDA fell by 61% on a full year basis. So they said that obviously this was significantly short of management expectations, and quite the opposite to Betsson. They're now having to make sort of cost efficiencies and cuts across the business to improve profitability as quickly as possible. There are a few things in the report that stood out to me, but again, I'll come to you first, Pierre, for your thoughts and insight on Kindred.
Yeah, one interesting positive thing for Kindred, actually, or I don't know if you can call it positive, but it's like every like bad story has something positive with it, I suppose. It's the fact that Relax Gaming has not lived up to their expectations after the acquisition. So when Kindred acquired Relax Gaming, they had these targets for their earnout, basically. Now, Relax Gaming has not been able to live up to these earnout targets, and that means that basically 40 million pound has been reassessed, basically, and will not be paid out to Relax Gaming. So that affected the EBITDA for Kindred with a positive 40 million pound this quarter. So you can on the downside, yeah, they didn't meet the targets, but at least they saved 40 million pounds based on missed targets. So if that's a positive or a negative, I don't know. It's a bit of a conundrum, I suppose. Other than that, I suppose it's the headwinds in Norway that it's that is a bit like front and center here. You guys know, can probably explain this better than me, right? But they are being pressured, and it's being more and more difficult for Kindred to market themselves in Norway. Payments solutions being a tricky thing in Norway now, and I heard that it's mostly crypto deposit they can take in Norway at this stage.
Yeah, exactly. It's a difficult market. They've been kind of locked in this long legal dispute with the Norwegian regulator, and they've had to basically make some changes to their customer offering to kind of keep them off their back, if you like, for a little bit. And that includes, not providing customer services in the Norwegian language, bits and pieces like that. And that led to a revenue decline of 12% in Q4. And interestingly, one of the questions to Betsson was, we've seen Kindred report a 12% decline in Norway. Have you gained market share by basically not bothering to do any of that? And Pontus was very tight-lipped. He didn't give away much, but he said, we've also had to make changes to our customer offering. So I think it is a very difficult market right now. They also had a 15% decline in Belgium because of regulatory headwinds and new deposit limits. But if we take a step back and look at their geographic mix, we just spoke about Betsson, and what was it? 60-something% was probably LATAM and Central and Eastern Europe and Asia. If we look at Kindred, 59.5% comes from Western Europe. So, that's why they're struggling. And another 26% is from the Nordics. Yeah, that would be my takeaway. Conor, the other big thing in this report was the fact they've set aside 7 million for some enforcement in the UK, which is a developing trend, as we've had another one to cover today, and we're still awaiting the ginormous William Hill rumoured fine as well. So what are your thoughts on that?
Yes, well, what was it in the story? It said Kindred are still negotiating with the commission to work out how much they're going to owe them, but it's just more of these 2019, 2020, 2021 failings on that classic kind of 2-year gambling commission delay. So still working out the details of it. What was the actual, was there any detail given on what the offences were, or what the breaches were, I should say?
No, not yet, but I'm assuming it will be anti-money laundering and social responsibility.
That's usually what it is, isn't it? That's what all the other recent fines seem to be. No, and I saw a very interesting post today on LinkedIn, which was about a couple of questions with regards to the ruling that came out today, the fine that was issued today, and it was about subtle changes in the language that the Gambling Commission is using. So in previous fines, they've talked about customers being allowed to lose a certain amount of money, and they seem to be moving away from using that kind of language and now talking more about whether, deposits were appropriate and in line with affordability and that kind of thing. So there's a slight shift that's going on, and I think it's sort of in advance of the introduction of the Gambling Act white paper. But yeah, it's something like 7 million they've put aside for it, so they're obviously expecting it to be a significant payout that they're going to have to agree to here.
Yeah, exactly. You can see why operators are confused, because I think it was only last week that Andrew Rhodes, the chief executive of the Gambling Commission, said that they hadn't mandated any firm limits or guidance on affordability, and then all of a sudden it's being written into their kind of licensing codes and practices. So yeah, not an easy market to operate in right now. I've got a bit of a quiz question that I think sums up really nicely what we've been discussing between Betsson and Kindred. So Pierre, especially, this will test how well you've been swatting up on their quarterly reports.
Oh no.
Right. So the question is regulated revenue mix. Okay. So this is interesting. What percentage of revenue comes from regulated markets? So we'll start with Betsson. What do you reckon?
50%. No.
Conor, higher or lower?
No. Can I change? 40%. 40%.
I was going to go higher. I was going to say about 65, but I'm guessing.
Okay. And what do we think for Kindred?
Oh, 90.
80%. 84%. 84.
Okay. Good guesses. The difference is stronger than you might imagine. So this is for Q4 only. Regulated revenue mix for Kindred, 81%. Very good guess, Pierre, with 80. Not too bad with 90, Conor. Betsson, 34%. So there we go.
I keep telling you guys.
You were onto something, Pierre. You're onto something. But I think that's an open secret, shall we call it, probably in this industry.
Yeah, interesting though to see how that's reflected in the difference between the performance, But either way, in terms of the stock market reaction, neither of them's fared too badly. Betsson had a really positive reaction, something like 7.4% increase in share price in the past 5 days. Kindred shares are up about 2% over the last 5 days, but I think they'd already issued something like a profit warning in January, and I think the market probably corrected at that time, and now it's kind of normalized again.
So here's the interesting part as well. So take Evolution. There's been this big debate by investors. How do you value unregulated revenue versus regulated revenue? Investors are making in the short seller report. Investors are putting emphasis on that regulated revenue should be valued higher. That revenue is worth more, basically, and that's reflected in then what is the PE number? What's the price to earnings ratio? Basically, how what's the company value divided by the earnings, basically, the yearly earnings. And so in Kindred's case, it's the PE number is 15. So the value of the company is 15 times earnings of a whole year. And let's check here quickly what Betsson is, if we can bring this up, because I think Betsson is quite considerably lower actually. So Betsson's PE ratio is 8.9. The PE ratio is much lower. So what that means is that investors are either thinking that Betsson is going to grow much slower than Kindred in the coming year, or they are not putting the same value to the growth that Betsson has in Latin America, Central Asia, as the revenues that Kindred is generating, which is mostly regulated. But Kindred had also set out a quite ambitious goal for 2023 to reach 200 million euro underlying EBITDA. So that also plays into this, of course, that Kindred has quite aggressive goals. But nonetheless, that's something to take into consideration as an investor as well. Not only how well are the companies doing, but actually where are the companies doing well.
Yeah, no, that's really, really interesting, actually. But yeah, I think Betsson shareholders will be pleased nonetheless. The board has proposed a dividend of 59.7 million euros to be split between shareholders. I asked Pontus whether he thought shareholders would be pleased that he was reinstated as CEO, and he said yes, they should appreciate it. Very modest.
I love his image in the quarterly report too. He's
Yeah,
like pointing at his advert in
morning
the AC Milan shirt.
But onto a company that is seeking to drive more shareholder value, and that is Gaming Innovation Group. They reported some Q4 numbers themselves that were quite impressive. So 26 million Q4 revenue, 44% increase. If we look at full year, what does that mean for full year? So yeah, revenue was 90 million, and that was a 36% increase on a full year basis. GIG is another company that's flying recently. Its media affiliate division especially is doing well. That rose 37% year on year. And basically what they've done is opened a consultation into separating the affiliate division from its kind of platform sportsbook services division, which I know some shareholders have been campaigning for a long time. Pierre, what do you think about this strategy?
Yeah, so we've talked about it so much in the last couple of years. The fact that GIG, they have these two arms in the company that are seemingly not really connected to each other, let's say. And I mean, when you build a company in general and you produce different revenue streams, what you want is for your different bubbles, let's say, in the company to be able to help each other grow. So you have bubble A, bubble B, and these two are connected, and everyone is happy. A good example of this is Evolution. They have live casino and they have RNG, right? And so these two are two complementary products that goes hand in hand through the distribution. They can add whenever they make an acquisition in the RNG space, they can add that to their distribution, which then increases revenue in the company. And so you have a kind of like a good symbiosis between the products there, and they make sense together. Now, on the other hand, in GIG, you have like if you want to explain GIG in one sentence, what the company is, you can't really do that because it is a media business, but it's also a platform business. So it is basically two companies that are sharing an office, more or less, you could say. And so this you would imagine creates some like internal challenges because where do you put emphasis in your marketing strategy? How do you position the brand? How do you tell the story of what your company is? And if we look at GIG, what they have done a lot in the last couple of years is they have branded themselves as a platform. That's where you see the marketing efforts is very much focused on promoting GIG as the best platform provider. Now, that obviously sets aside the fact that pretty much all revenues until recently has been derived from the media business. So even in the latest quarterly report, out of the 10.8 million euro EBITDA that they announced, 9 million of the 10.8 is from the media business, right? It's much bigger than the platform business, even though it's the platform side of the business that takes a lot more operational focus. So we've talked about this many times. It's just a matter of time before they have to do something about this, either to sell one of the divisions, or as they are doing now, they are splitting the divisions up into 2 publicly traded companies. And I remember, I think it was you who reported on this, Jake, or someone in the team, that Hassan Mokka, the very the very colorful head of IR in GIG, he spoke a little bit too much in an interview a while ago, and he kind of publicly announced his plans, which was maybe something he regretted afterwards. But it was a bit of a hidden secret, I suppose, that this was going to happen sooner or later.
Yeah, exactly. That was one of the first stories I wrote for iGaming Next back in December 2021. This was where he was in conversation with another major shareholder, and he certainly hinted that this was on the agenda. And it looks as though perhaps the acquisition of Ask Gamblers was kind of the straw that broke the camel's back, if you like, because that media and affiliate division then just became massive. Obviously, with a really significant brand added to it, it made no sense to keep the company combined. And it's worth pointing out as well that up until about a year ago, they were doing B2C as well. They had all the B2C casino brands to manage on top of the platform services and on top of the affiliates. So I do think Richard Brown's done a good job of streamlining this business, making the strategy much clearer, because I think they were kind of an example of trying to do too much too quickly, possibly. And I think there's some analysts that are still trying to get their head around this, because one of them asked whether the decision to split the group was about, increasing the potential for synergies. And he simply said this decision is not about synergies, as you pointed out, Pierre, because they operate entirely separately. It's about what the opportunities for each business are as a group or independently in the long term. So yeah, this isn't a surprise, but it's good to see that they're actually acting on this now.
You gotta respect Robin Reed. You gotta respect Robin Reed, though, man. When he started the company, he was like, "Fuck it! Like, I'm just gonna we're gonna start the best casino. We're gonna build the best sports betting product. We're gonna do a media business. We're gonna launch in the US. Like before PASPA was repealed. I mean, the guy was ahead of himself." And then he brought Steve Wozniak to Malta as an interview. Robin started like an absolute machine at that time. Obviously, he was a bit ahead of his time than Robin, and with changes in regulation, eventually kind of the ship came back to earth, of course, and the business had to restructure itself. But it's great to see that that GIG is doing well again. And also, as a bit of a Cinderella story here, Robin Reed is now back as an investor in GIG with a recent investment from Happy Hour as well. So everything has gone full circle here recently with GIG. I like it.
Nice. Yeah, you can't fault his ambition. That's interesting that he's a shareholder. Maybe he was, making up for those earlier strategies. Yeah, fascinating stuff. I think that's the last topic we had on our agenda today. Unless there's anything else, we'll probably look to wrap up shortly. What do you reckon?
Yeah, can I just I have one more thing that I need to talk about today, and we mentioned the legend that is the Mattress Mac here a couple of times today, right? And I suppose a lot of people are wondering, how does Mattress Mac look like, right? And if Ella in the background here can put up the screenshot on the screen, maybe we get there. Here's Mattress Mac. Here's Mattress Mac. There he is, with
exactly
his Astros
as you'd imagine.
He's just rubbing it in there. That's basically what you're looking at here. Is a briefcase full of Kindred's hard-earned
Is that Kindred
GGR.
CFO handing over in the background?
Yeah, with a slightly concerned smile in the background as well. And here you can see Mattress Mac basically rubbing in to all the Kindred shareholders here. That is basically your money that you are looking at here. But well done to Mattress Mac. Good work.
Yeah, you got to get happy when you get them right.
Yeah. Lovely way to end the show there. I wonder what his bets on the Super Bowl were, actually. Maybe that's a story for another time. Right. Any final words, fellas, before I say thanks to our amazing audience for tuning in again today?
Thanks for having me again, Joe. Good to see you both.
Thanks for being on today.
My pleasure.
It's been great. Thank you, guys.
No, thank you very much, Pierre. And you're lucky you've just escaped the cut-off point for making predictions for 2023. So I'm not going to hold you to account live on air like I have done with the others. But we'll be back at the same time next week. Thank you to everybody that tuned in and commented. It's great to hear from you as always. And a huge thank you again to Playson for sponsoring Weekly News. Thanks a lot.
Thank you, guys.
Summer, step into the Mediterranean haven of Malta. Crystal clear waters, ancient ruins, and towering cliffs. The iGaming industry is converging in Malta to take on everything from green courses, the hottest tournament tables, courts, lanes, and of course, the UNESCO city of Valletta for iGaming Next 2023. A week-long festival experience rounding up with the biggest high-end European pool party, Showers, celebrating its 10-year anniversary. Join over 4,000 senior delegates and top affiliates from all around the world alongside industry giants for an unforgettable iGaming festival week. iGaming Next 2023. Contact our sales team for sponsorship opportunities.